In this section, we will look at how India's real GDP growth for the year ending March 2023 was 7.2%, surpassing expectations and displaying a strong underlying momentum in the economy. This was announced by the Chief Economic Advisor to the Government of India, Dr. V. Anantha Nageswaran, on June 12. What factors contributed to this impressive performance of the Indian economy? According to Nageswaran, there were several drivers of growth in 2022-23, such as a rebound of private consumption, which accounted for 58.4% of GDP in the second quarter of FY23, the highest among the second quarters of all the years since 2013. This was supported by a near-universal vaccination coverage that enabled people to spend on contact-based services, such as restaurants, hotels, shopping malls, and cinemas. A surge in exports of goods and services, which grew by 25.6% and 18.4% respectively in FY. This reflected a shift in the gears of the production processes from mild acceleration to cruise mode, as India took advantage of the global demand recovery and diversified its product range and quality. A high credit growth to the micro, small, and medium enterprises (MSME) sector, which averaged over 30.5% during January-November. This indicated a revival of entrepreneurial activity and job creation in the informal sector, which was hit hard by the pandemic. A robust capital expenditure, CAPEX, by the central government, which increased by 63.4% in the first 8 months of FY. This boosted public investment and infrastructure development, which have positive spillover effects on private investment and growth. A return of migrant workers to construction activities, which helped the housing market, witnessing a significant decline in inventory overhang to 33 months in Q3 of FY23 from 42 months last year. This also improved the demand for cement, steel, and other construction materials. These factors combined to create a strong underlying momentum in the economy, which resulted in a real GDP growth of 7.2% for the year ending March. This was higher than the projections made by various agencies such as the World Bank, 6.8%, the IMF, 6.9%, and the RBI, 7%. However, Nageswaran also cautioned that there were some downside risks to this growth outlook, such as the uncertainty caused by the war in Ukraine and its impact on oil prices and global trade. India is a net importer of oil and a large exporter of goods and services, so any disruption in these markets could affect its growth prospects. The inflationary pressures arising from high commodity prices and supply chain bottlenecks. The headline inflation was projected at 6.8% in FY23 by the RBI, which is outside its target range of 4%, plus or minus 2%. This could limit the scope for monetary policy easing and affect consumption and investment demand. The fiscal challenges posed by the need to balance growth and sustainability. The central government's fiscal deficit was estimated at 6.8% of GDP in FY22, which was higher than the pre-pandemic level of 3.5%. While this was necessary to support the economy during the crisis, it also increased the public debt burden and reduced the fiscal space for future stimulus. Therefore, Nageswaran stressed that India needs to continue its structural reforms and prudent policies to maintain its growth momentum and overcome these challenges. He said that India has a potential to grow at 8% or more in the medium term if it can improve its productivity, competitiveness, innovation, and human capital development. To conclude, India's real GDP growth for the year ending March 2023 was 7.2%, surpassing expectations and displaying a strong underlying momentum in the economy. This was driven by several factors such as private consumption, exports, credit growth, CAPEX, and housing market recovery. However, there were also some risks such as geopolitical tensions, inflationary pressures, and fiscal constraints that could affect this growth outlook. Therefore, India needs to pursue its reform agenda and sound policies to sustain its growth performance and achieve its potential. One of the key drivers of India's GDP growth in 2022-23 was the performance of the services sector, which accounts for more than half of the economy. Services exports, in particular, did very well for the country, while goods exports faced challenges due to the war in Ukraine and oil price rise. Services exports grew by 18.7% in 2022-23, compared to a contraction of 4.8% in the previous year. This was mainly due to the strong recovery in travel, transport and other business services, which were hit hard by the pandemic. India also benefited from its competitive advantage in information technology and software services, which continued to grow at a robust pace. According to the Economic Survey 2022-23, services exports contributed 1.3 percentage points to the GDP growth of 7% in 2022. This was higher than the contribution of goods exports, which was 0.9 percentage points. The survey also noted that services exports have a higher multiplier effect on the economy than goods exports, as they generate more income and employment opportunities. However, goods exports faced headwinds in 2022-23 due to the geopolitical tensions in Europe and West Asia. The war in Ukraine disrupted trade flows and increased uncertainty in the region. India's exports to Ukraine declined by 15% in 2022-23, while exports to Russia and other European countries also slowed down. Another challenge for goods exports was the rise in oil prices, which increased the cost of production and transportation for exporters. Oil prices averaged $82 per barrel in 2022-23, up from $41 per barrel in 2020. This also widened India's trade deficit and put pressure on the current account balance. The chief economic advisor to the Government of India, Dr. V. Anantha Nageswaran, said that goods exports were on the weaker side in 2022-23 due to these factors, while services exports did very well for the country. He also said that the industry has to invest in R&D, marketing, product diversification and quality improvement to maintain or gain market share in goods exports. To sum up, services exports were a bright spot for India's GDP growth in 2022-23, while goods exports faced challenges due to external factors. The services sector showed resilience and adaptability in the post-pandemic world, while the goods sector needs more support and innovation to overcome the hurdles.